Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for a weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Managing Director and Washington Research Analyst Jeannette Lowe to talk all things policy and politics. Jeannette, how are you doing today?
Well, Ross, how are you?
I'm really good. Great to talk to you. Obviously, a lot coming from Washington that's having an impact on markets. I think we probably need to start with trade and tariff update. I think all eyes for investors are on the April 2nd date when we're hoping to get some clarity on reciprocal tariffs, potentially sectoral tariffs. What is your broad update at this moment in time? And noting that we're recording Thursday morning, March 20th, but what is your update here? What are you watching for? And what do you expect by that early April date?
Yeah, so April 2nd is kind of the date that the administration is planning to announce a number of trade policy changes. And so one of the big things we think is going to happen is they're going to announce reciprocal tariffs and potentially also sectoral tariffs. And so reciprocal tariffs are basically the US taking an effort to try to counteract either tariffs that other countries impose on US goods. Maybe it's also digital services taxes that they impose on US companies, also their VAT taxes, and trying to take into account all those tariff and non-tariff barriers that impede US exports going to those countries. And so they are still working on how they're actually going to structure these tariffs. It might be one rate for every country. It might be just applying the rate that that country applies on US goods that we then apply on their goods. So that is still being worked out, but that is one thing that they're really trying to do. The goal here is to eliminate those barriers and to actually get countries to start to negotiate with the United States. So, for instance, if you have a country like India that has very high tariff rates on specific goods, they're looking for India to actually come to the table and lower those rates. And you have seen a number of countries starting to make those negotiations happen. So you've seen India talk about lowering their rates, Vietnam talking about lowering rates, the UK is in new negotiations with the US. The other piece of this is sectoral tariffs. And this is so potentially 25% tariffs being targeted at pharmaceuticals, autos, semiconductors, and potentially other sectors. And so, really, what the Trump administration is trying to do here is trying to target areas where there is a significant trade deficit with the United States, even if that country imposes low tariffs. One particular target is Ireland because the US gets a significant amount of its pharmaceutical imports from Ireland. And there, even though Ireland does not impose very large tariffs on US goods, that's really an effort for the US to try to close that trade deficit with Ireland. But a lot of this still hasn't been exactly determined how they're going to put it into place. So we're trying to just give as much information to investors at this time, just to kind of prepare as we look ahead to that big date and that announcement. One other piece I'll just add to this is we don't necessarily know how this is going to come out into play. Will this be all announced, but then maybe not have full implementation? Will there be delays? Will reciprocal tariffs be announced on a country by country basis? All of those things still need to be figured out.
Yeah, and obviously there is a growing uncertainty, and you hear it if you listen to earnings calls or read what businesses are saying, just around what the rules of the game are, right? And so that's why all eyes are on that April 2nd date to hopefully get some clarity. In the meantime, I know you've talked about how GOP lawmakers want to counter some of that uncertainty that's weighing on business activity with other pro-growth levers. So we're looking at the tax bill, but as you've noted, that's just an extension of largely tax cuts that are already in place and not fresh stimulus. So could you give an update on where that stands, but then also what are some of the other pro-growth stimulating levers that the party in power can kind of pull in 2025?
Right. So members of Congress are definitely watching what is happening with confidence with consumers and businesses. Obviously, businesses are not sure what to do with this tariff uncertainty hanging over the economy. They're also watching what is happening with the US economy and what those tariffs will actually look like and what their impact will be. And so, as they're looking ahead to this tax bill, which we are still kind of in the beginning stages here, so we still don't even have the initial budget resolution. It's passed the House. It hasn't yet passed the Senate, so that's still a couple of weeks away before they kind of set those top line numbers for how they're actually going to build out the reconciliation bill. Again, very wonky information, but you need a budget resolution before you move on to the reconciliation bill, which is the actual tax bill. So we're still kind of looking for April before they even really kind of get started on writing this. But as they're watching the economy, and as you just noted, extending what is currently in law, which is the 2017 tax cuts, even though they're expiring at the end of this year, just extending them does not provide net new stimulus to the economy. So if members of Congress are worried about what might be happening with the economy, what the impact of tariffs might be, they are looking at a couple of different pro-growth tax policies that can be included. So one of those is providing full expensing for capital equipment purchases. Another is providing immediate expensing for R&D costs. A third is potentially a new one, which is looking at full expensing for construction facilities. So being able to incentivize factories being built in the United States, as domestic manufacturing is a key priority for the Trump administration. And then fourth is also trying to lower the corporate tax rate from down to 15% for domestic manufacturers. Now, they may not include all of these pieces in the tax bill, but these are all kind of on the table right now, and it's something that we'll be watching for. And I think members of Congress are going to have to be playing with the numbers and looking at what they think is the risks to the economy to see if they can offset some of that through the tax bill later this year.
Yeah, and those are certainly not going to be headline grabbing in the same way trade and tariffs are, but very important, especially on the business activity side, where we're seeing a lot of this uncertainty result in potentially lower hiring, potentially less capex. So great note and good to keep our eyes on as we move forward. Jeannette, thank you so much for the time. This has been super insightful as always, and we'll look forward to talking to you again soon.
Awesome. Thank you so much, Ross.